So let's continue to be mindful. If we want to see higher prices, we want to see, what were some of our higher targets on XRP? We want to see 382 to 444 come into fruition. We need to see a continued risk on induced environment, right? Are either going to be drivers for you in the market, creating a rising equity curve in your portfolio, or they're going to create stalling or downwards momentum in your portfolio. And you don't want that. You want to be on the right side of history, not on this speculative, nonsensical side of history. Alrighty, everybody, what is going on? Welcome back to another weekly fundamental video breakdown. In today's video breakdown, I want to really thoroughly digest and get you guys to see a very clear perspective as to what's affecting market conditions, taking a look back at July and everything that we have touched on in this community since the beginning of July, showing you guys that you are part of one of the realest analytical communities on the face of this internet, not doing any outdated, outrageous, crazy, unrealistic price predictions, really thoroughly breaking down the markets for you guys so that way we understand where we're at and hopefully where we're going in the near term based off of research from institutions, based off of institutional delta zones, keeping us ahead of 99.999% of retail investors. I want to really thoroughly break down looking back at July, ask you guys some interactive questions, what got us to where we're at, so that way everybody understands, the landscape moving into August. And then taking a look back at some previous calls, go over some things that we had discussed could possibly weigh on risk assets coming up into this week, and then thoroughly break those down and talk over those things for you guys. But while we're doing all that, show you guys timestamps, because in this community, timestamps matter to us and are extremely important, because we can't just sit here and speculate on these markets without really showing that as the markets move and as the markets change, we are accurately analyzing them, right? If you're just making outrageous price predictions and hoping for the best, you're not going to actually make money in these markets. So moving with the changing tides, I'm going to show you guys how well in advance we were talking about certain things that banks and financial institutions are now writing reports on today, just to show you guys how we keep you all in the loop here and hopefully motivate you guys to start to tap into these key vocabularies, these fundamental breakdowns, the accurate analysis in terms of deltas that Scalper gives you, because it all plays a role in your survival in these markets long term. All right. So starting here with this post, because I always like to start off with psychology. That is the foundation of anything that you're going to achieve in business, in life, in your, personal relationships, anything. It's all going to come from a strong psychological infrastructure that you build for yourself that is unbreakable. So I said here, accurate thinking is the basis of all human achievement. Excuse me, I didn't say that. I posted that. That is a quote from one of my most favorite authors, Napoleon Hill. um, And you guys know that I'm a firm believer in promoting one of my most favorite books. It's in my top 5 collection of books that I would recommend to somebody, for anybody that needs to like change their life or start something new or find purpose and meaning, is Outwitting the Devil by Napoleon Hill. So accurate thinking is the basis of all human achievement. And so now tracking at the end of July, especially if you're new in this CYPRX community, let's just take a second. You know how Aqua does those breathing techniques at the beginning of his calls, and it's really a mind clear. It allows you to really think clearly and take a second and look back and reflect. Do that for yourself after this call. What influencers were telling you guys at the beginning of August that we were going to see $15, $20 XRP price targets? What influencers at the beginning of August told you, or July, excuse me, told you guys that FedWire was going to freaking send ISO tokens to the moon, all this gibberish, all this bull crap. Okay. Really reflect and start to change the information that you're accumulating, because the information that you're soaking in is what you become. Those are the direct results that you get in your investment portfolio, that you get in your personal life, that you get in your business life, that you get in your finances. All of these things are either going to be drivers for you in the market, creating a rising equity curve in your portfolio, or they're going to create stalling or downwards momentum in your portfolio. And you don't want that. You want to be on the right side of history, not on this speculative, nonsensical side of history, right? Where most individuals in the retail space have no idea what the heck they're talking about. So just to show you guys that we are one of the most thorough communities on the face of this internet for research, This is a July 7th recording that we had here in the private CYPRX community where we were going over levels and higher price targets on XRP that we could possibly see. The highest level that we gave in this particular video breakdown was $3.39 to $3.82. That was the highest price level and target that we gave for July on XRP. All right. And you can see now, fast forwarding to price action, we stalled right underneath of $3.82, hovered around $3.39. Now we're back down at another institutional delta at around $3 to $3.25. And the market's kind of just doing its thing, ranging sideways right now, right? Waiting for another catalyst. Okay. And so going back to the beginning of July, you can see that we were one of the only communities now that provided accuracy, thorough analysis, non-outrageous or nonsensical price projections, and really gave detailed fundamentals as to how we were going to get to $3.82 or what could weigh on the market sentiment and keep us from surpassing that. Now, looking back at the end of July, we're here, and everything that we had discussed and talked about has now materialized. So, asking you guys the questions real fast, just to see if you all are learning. There's a July 16th report where we talked about in detail. I'll flash the screen again in a second, but I want to ask you all questions before giving you the answers, where we thoroughly talked about in the middle of July why the month of July was bullish so far, what contributing factors were supporting risk on sentiment, and what was driving the market optimism higher, right? So there are five things that we had primarily discussed, and I want you guys to give me at least three or four of them. So somebody don't need to raise your hand. I know that everybody will probably blab out, but somebody give me one of the things contributing to the risk on sentiment that we saw in July.
We had dovish sentiment from some of the Fed speakers throughout the month.
Great job, Eric, right? We had Fed speakers comment all throughout the month of July, and I'd say the vast majority of them actually supported rate cuts either imminently or in the second half of this year, right? Later on in 2025, excuse me, especially they reiterated if the data supports it, they definitely support rate cuts, right? So great job, Eric. Pat yourself on the back. Somebody else give me another one. So we got dovish Fed speakers. What was another contributing
Earnings,
factor to risk on sentiment?
earnings report, strong earnings report.
Yeah, great job, D'Angelo. Very simplistic. We had upbeat earnings reports from multiple organizations and large tech companies, banks, during the month of July, right? So great job. Somebody give me another one. So that's two now. Give me two more,
We had some positive tariff
right? We had
issues.
good job. I didn't see the name, but whoever that was, right? The vast majority of the month of July, the market sentiment towards tariffs was actually positive, right? We had Japan trade deal optimism priced into the markets. We had EU optimism of a trade deal priced into the markets. There wasn't really any negative tariff headlines, okay? And that supports a more risk on market sentiment. Okay, so that's three. We had positive tariffs, we had upbeat earnings reports, and we had dovish Fed rhetoric. Somebody else give me another one.
CPI came out with the lower than expected at the beginning
Yeah,
of the month.
yeah. Good job, Joseph, right? The PPI figures came out all across the board lower than expected. So just in a nutshell, without confusing anybody with acronyms and percentages, long story short, the data for the month of July that we got that is again lagging, right? It showed support for a rate cut environment, or at least it contributed to the markets pricing in a higher probability that at some point in time later on this year, the Fed's going to be able to cut rates, right? We saw relatively lower inflation, albeit some of the inflationary metrics came out mixed, and we still have, as of time of recording this particular video breakdown, the core PCE on the horizon this week. But overall, we did see lower inflation prints in July. Okay. So great, right? Another contributing factor to the risk on sentiment. So showing you guys now, and that's great. It's just so great to hear you guys learning and being able to blab these things out because it just shows that you guys are progressing and actually paying attention to key market drivers that these institutions, these banks, these hedge funds, these asset managers, these people that actually move the markets are paying attention to. Do you really think that when the market's pulling back, you see this all the time in crypto? It makes me laugh, and I've been in this space for so long, right? When the market's pulling back, you'll see somebody post on Twitter, up, here we go. Brad Garlinghouse is dumping his XRP on you guys. You really think that financial institutions that are trading in these markets right now with hundreds of millions of dollars give a fuck about what Brad Garlinghouse is doing right now? Like, no, not at all whatsoever. And anybody that thinks that, again, is not tapped into the right communities, but it does exist. And it's horrible to say that out loud, that it does exist, but it's the truth. And so you guys being in this community, being able to answer those questions is powerful because you're actually seeing the fundamental drivers that matter in these markets that these algorithms adjust conditions to. So you can see here, this is our report. You guys nailed it pretty much all on the head. We had dovish Fed commentary. By the way, this is our report from July 16th. So halfway through July, we had been discussing about this. Dovish Fed commentary with supportive signals for 2025 rate cuts, soft inflation data to keep rate cut expectations alive, positive or neutral developments in global trade tensions, which we got. No major escalations in geopolitical tensions, which is one thing that we did not discuss or put on that list, especially in the Middle East. We did not have any significant outrageous outbreaks of war and controversy either in the Middle East or Russia, Ukraine, albeit there were little tiny small contributing conflicts, but nothing that significantly increased the demand for safe haven, right? And then D'Angelo hit it on the head where he said upbeat earnings reports from major US banks and tech leaders, right? So you guys completely nailed it on the head. Now, obviously, of course, we had some other contributing factors, like we had positive legislation signed into fruition with the Genius Act and so on and so forth. And so what else did we have? There was something else. It's escaping my thought process right now. But regardless, now you guys can see where we're at. So all of that in mind, now at the end of July, nobody should be confused as to why we had a bullish month. Okay. But that's not something that we can allow cloud our judgment heading into August, right? Become blinded by greed, expect higher prices, and expect the market to just continue to do what it's been doing. It's possible, but we need to see more contributing factors as we roll into August if we want to see that materialize and come into fruition. And if not, and we see the opposite of that, we see a risk off sentiment, we need to understand the contributing factors that could equate to that type of environment as well, right? Which is, again, what we talked about in our previous Zoom calls. And now we're starting to see it materialize. It has not fully come into fruition, but prices are starting to stall. If you go look at the total cryptocurrency market cap, which I'll show you guys here in just a second, you can see it reflected in price. Buyers made yet another attempt to break last week's highs. They failed at that attempt. Sellers defended, and now prices are retracing. Okay. And so we can't just sit here and expect that buyers are going to have enough momentum and buy volume to break these highs if there's no contributing factors driving continued market optimism. So with that in mind, we had previously discussed this. And again, I just want to show you guys timestamps because now, fast forward to today, I'm going to read a document, a fundamental breakdown from an institution. This is from July 28th, 2025, where word for word, it's almost as if they are identically copying a freaking CYPRX report that we wrote days in advance. So I'm just to show you guys that we're tapped into institutional information and what these large banks are paying attention to. Let's go back some dates in our private community. So this is July 25th, 2025. I want you guys to listen to this because at about 16 minutes and 16 seconds into this Zoom call, we had discussed about the inverse correlation with risk assets and a safe haven dollar. And I'd showed you guys bit by bit what had created a lot of risk on sentiment due to the dollar weakness and the inverse correlation between risk assets and what was going on with the dollar weakness at the time. And at this particular moment in time, we discussed and talked about one of the contributing factors that could weigh on risk assets in August is if we see data or Fed rhetoric at the beginning of August that supports dollar strength. And it would most likely lead to some type of risk off induced event. Profit taking and riskier assets like the euro, the Great British pound, stocks, crypto, not a bear market reversal, not some freaking extreme, oh my gosh, we're going to go into a bear winter. No, but could we see a couple $100 billion shed from where the market is currently sitting at, considering that the market literally went up all of July? Absolutely, right? Especially if the conditions are more favorable for the dollar or other safe haven assets and less for risk currencies, which as of time of recording this video breakdown is one of the contributing factors leading to the stalling out of prices and where we're currently sitting at today. But we had already discussed this. So anybody that's now confused on the market conditions that we're living through right now, again, that's why it's important to go back and watch previous Zoom calls. So take a second and listen to this where we discussed this. It's about a minute long. So what's possible? What could happen next? What do we need to be mindful of? And what things are on the horizon that could lead to things like dollar strength, right? temporarily, because over time, the dollar is most likely going to continue to weaken. However, it's not guaranteed. And so now that we know that right now, risk assets are heavily inversely correlated to the dollar, if we were to see dollar strength, that could be a factor contributing to some profit taking and riskier assets like crypto, leading to increased demand for dollar. And what are those factors, right? Because I guarantee you, if we see some type of strong leg up in the dollar, which is not off the table as a possibility, it's most likely going to reflect itself in some profit taking and riskier assets like crypto. Okay, so I just wanted to show you guys that days in advance, before the institutions are starting to talk about these things, we already cover these things here in this community. So now let's go look at today's fundamentals. Okay, actually, as a matter of fact, let's pause. In today's report, yesterday's report, because I wrote this Sunday, July 27th, I had briefly touched on the US EU trade deal and why momentum has stalled and why the market is actually seeing this as more of a neutrally induced event rather than an extremely optimistic induced event. So hopefully you guys read this, because I want to read it for you all right now, because not only did we talk about dollar strength in advance, but we also talked about in this report how there was a lack of bullish momentum after the release of the US EU trade deal. And then in this bank report, it both talks about, this is again a bank report from 2 days after our reports here in this community. It talks about dollar strength and it talks about the neutral perspective of this EU-US trade deal and how the market had already priced this in. So let's read yesterday's report. Again, considering that back on the 25th of July, we had discussed and talked about dollar strength being a key contribution to a pullback in risk assets if we were to see one. So taking a look at this report, it says, despite today's announcement of a principal trade agreement between the United States and the European Union, the total crypto market has failed to break higher into price discovery. This lack of momentum, despite seemingly bullish headlines, should not be overlooked. And you can see how yesterday in this screenshot that I took of the markets, I was extremely confident writing this out to you guys, showing you all last week's highs. And now if we go and look at the total cryptocurrency market cap, we rejected that level to the freaking T, right? We did not break higher. This is how you can see that now today, the analysis that I was giving you guys yesterday was full on accurate. This lack of momentum, despite seemingly bullish headlines, should not be overlooked. At the time of writing, the total cryptocurrency market cap is hovering around 3.91 trillion, the same level that we saw last week. We need to be careful in case momentum stalls out here. The market may need more than just diplomatic progress to drive another bullish leg. Let's see if we can break above this area's last week high and retest it, creating its support, or if this area is rejected, coupled with sentiment turning risk off. If supportive macro fundamentals do not follow throughout the rest of this week, while trade diplomacy is an important factor for global sentiment, markets are still heavily data-driven, and crypto markets remain tightly correlated to broader risk appetite. A trade deal alone is not sufficient to sustain a rally, especially when that deal is not signed yet, right? So I read the details of the deal and realized that it's not actually as optimistic as people thought it was going to be, and there are still a lot of uncertainties lingering in the deal itself. So right here, you can see my highlights. It says the big caveat today is the deal. However, it's that there's nothing on paper yet. The risk seems to have been avoided for now. Looking ahead at face value, today's deal falls in line with their base case scenario of an effective tariff rate on European goods of close to 20%. However, that is not vocabulary that we like to see. However, that term right there, however, is like uncertain. Like, however, wait, what do you mean, however, right? We also know that a trade deal is only done and dusted when everyone has signed it, and it has not been signed by everybody yet. A huge factor still remains to be seen. Let's not forget, particularly in trade, only a signed deal is a deal. So the weekend meeting between President Donald Trump and European Commission President Ursula von der Leyen produced a verbal agreement that was hailed as a breakthrough. The deal reportedly includes a 15% tariff on nearly all European exports to the US, excluding sensitive sectors like steel, aluminum, and pharmaceuticals. Trump also claimed that the EU committed to purchasing $750 billion worth of US energy and investing an additional $600 billion into the US economy. While both leaders characterized the agreement in glowing terms, Trump called it the biggest deal ever made, and von Leyen labeled it huge. There is no signed document yet. This is key in global trade. Only signed and ratified agreements are truly holding weight. Until we see something in writing, I said right here, I personally remain cautious. There's historical precedent here. Negotiations often face setbacks during ratification in the European Parliament or among member state legislators. So if we saw that happen, that would be bad, right? That would be bad. And again, it still leaves uncertainties on the table. Moreover, future decisions around U.S. tariffs on chips, pharmaceuticals, are two critical global sectors still remain pending. This will be determined by separate trade investigations under Section 232, with announcements expected in the next 2 weeks. I highlighted that in bold for you guys because that puts us into the middle of August. So up into the middle of August, we're still going to see uncertain tariff headlines. If you guys remember back Zoom calls ago, I said that the tariff uncertainty was probably going to last until at least October at the latest, in my personal opinion. I think that they try to get everything wrapped up before the holidays start, November and December. I could be wrong. Pharmaceuticals will not include, it says here, the more uncertain part of the agreement is the investment part, right? So you can see that key vocabulary right there. I highlighted that for you guys. Judging from previous experiences, but also acknowledging that the EC will be depending on national governments and businesses to actually increase investments and make this part shaky. And then right here, pay attention. I have this highlighted in orange for you guys. It says, however, the U.S. is set to announce the results of the 232 trade investigations in 2 weeks and decided separately on tariff rates for chips and pharmaceuticals. So I have that highlighted that, again, it's a date that we need to be mindful of, and nothing has been completely agreed upon or signed yet. That adds another layer of uncertainty to the market outlook. So while worst case scenario like a full-blown tariff war seems to have been temporarily averted, this is more of a de-escalation rather than a resolution, right? Which is exactly why I think even though it was optimistic for the markets, it did not create another leg higher and the market anticipated as some extremely bullish induced event. Given the potential size of the agreement and the reduction in geopolitical risk, many might have expected the crypto markets to push significantly higher. But why instead are prices stalling? And why does momentum appear to be weak? Keep in mind, I wrote this for you guys yesterday, and now we can see that reflected in prices. As of time of recording, the total cryptocurrency market cap is down $47 billion. Okay, so just showing you guys the accurate analysis here. This is because traders understand that real drivers of sustained risk-on sentiment lie in upcoming macro data and central bank policy direction. The July FOMC meeting is expected to be a placeholder with no policy changes, but the Federal Reserve Chair Jerome Powell's tone will be closely scrutinized. Right now, the balance of risk remains unchanged from June. Inflation risks still lean to the upside, while the labor market is still showing some signs of cooling. Any hawkish shift in Powell's rhetoric could spark markets, particularly if it weakens the current expectations of rate cuts later this year. I highlighted that in bold. Again, when we get to the bank fundamental breakdown from today, after we wrote this here at CYPRX, you're going to see this exact same sentence pretty much in the bank document. The Fed official's trajectory will become clear by September meeting, by which time it will have 2 more rounds of inflation data, labor market data, and GDP data to analyze. However, the real wildcard remains Powell's speech at the Jackson Hole Symposium expected on August 22nd. I know that there's some of you guys in this community that listened to that live with me last year. Historically, Powell has used this platform to send strong policy signals, most notably last year's speech that preceded a 50 basis point rate cut. If you guys remember last year, the market was down in August, July 31st through August 2nd. We had the Bank of Japan rate hike lead to unwinding of the yen carry trade. We had the freaking NFP come out extremely bad, which sparked recessionary fears. The market tanked $700 billion, right? After that, the next major event was the Jacksonville Symposium. I remember myself, Jamie, there was a couple of other people sitting in on that, listening to it live, and we heard Jerome Powell say, hey, look, labor market's bad. I support rate cuts. And then the market freaking completely turned around. And in August of last year, the market bottomed out, right? And we paid attention to all that. So we're going to continue to be mindful of that event this year and pay attention to his signals, whether they come out more hawkish leaning or dovish leaning. This year, many expect him to give a clearer hint on near-term monetary policy, especially if inflation remains sticky and troublesome. Okay. Beyond the Fed, markets are also keeping an eye on upcoming speeches from the Bank of Japan, inflation and GDP prints, labor market data, and if any of these indicators push back on the rate cut narrative or worse, suggest central banks may need to stay hawkish for longer, risk assets like crypto could face renewed selling pressure. At present, prices are holding on to gains, but traders should exercise caution if Powell leans hawkish, labor market data shows no signs of cooling, or if inflation data surprises to the upside, we could see profit taking and potential pullbacks heading into early August. Right? So I'll pause it there and I'm going to highlight this and we'll come back to finish this off. So now let's fast forward to all of today's fundamentals. Now, having shown you guys up to this point that here at CYPRX, all throughout the month of July, we've been accurate, we have not been outrageous, and we've beat all of the retail articles that come out after the information that we put here. For example, in the fundamental piece that I just read to you guys, we talked about this creating market uncertainty. Here's trading economics via a report from today, and you can see right here it says, the deal includes a 15% tariff on European exports, half the 30% initially threatened by the U.S. However, the lack of a deal on which sectors are covered and the possibility of exemptions left some uncertainty hanging over the agreement. You guys can see that vocab right there. This is again a report that came out after our July 27th report. Let me show you guys another one, because remember, days in advance in this video Zoom call on the 25th of July, we were talking about dollar strength being a possibility that would weigh on market sentiment. Well, if we come over here, what does this report from Trading Economics today say? The US dollar index rose to 98.1 on Monday, its highest level in nearly a week, supported by easing trade tensions following the newly announced US-EU trade agreement, right? If we come over here, we see another one. It says, markets advance on Monday as trade optimism surged following reports that the United States and China are set to extend their mutual tariff pause by another 90 days. So albeit the market is pulling back, we're still seeing some optimism that is going to need to be priced into the market, especially if this comes out positive. So we have a US-China announcement possibly on the horizon that we can be mindful of, right? You see over here, it says, additionally, US and Chinese officials are set to meet today and tomorrow to discuss ongoing trade issues with an extension of the current trade truce set to expire on August 12th. So here we have other dates to be mindful of. And today and tomorrow, we now know that we need to be tentative to any US-China trade announcements. If we come over here, this is another report from today. You can see the date, July 28th, and what does it talk about? The US dollar index posted its highest settlement in 4 sessions ahead of the weekend, and price looks to be poised to extend its gains. So it's talking about possible dollar strength. This is again a report from 3 days after we talked about dollar strength possibly being one of the contributing factors to a pullback in risk assets. Then down here, it also gives us a little bit more insights. It says Treasury Secretary Scott Bessent seemed to suggest that a 90-day extension of the Sino-American tariff truce is set to take effect. So again, we'll just be mindful of that. It says top Chinese and American negotiators are set to meet in Sweden today and tomorrow. All right. It says here the greenback responded positively to headlines confirming what the U.S. Treasury Secretary Scott Bessent seemed to suggest would likely be a 90-day tariff extension to the American truce between China and the US. So we'll be watching that. Now, if we come over here, all right, to wrap all this up to show you guys, this is from ING, July 28th, 2025, and it says, the announcement of a US-EU trade deal has lifted equity futures on both sides of the Atlantic. Investors are more worried about a bubble now than a recession. The deal takes some pressure out of the August 1st tariff deadline and shifts the focus back to a very busy week of macro data. Here we think the Fed meeting, inflation, and jobs data can support the dollar. I highlighted that in red. Why? Because if we see support for the dollar, to some extent, it's most likely going to weigh on risk assets or create an environment where risk assets cannot excessively or bullishly accelerate, right? Now, I'm not saying that if we do see dollar strength, it's going to create a down day in the markets because we could just see some consolidation. However, if we continue to see dollar strength and the pricing out, remember we talked about this, the pricing out of rate cut probabilities. Remember what happened in July, the market priced in a high percentage probability of rate cuts. The market's going to dial back those expectations. Logically speaking, to some extent, we don't know to what extent, but to some extent, we can assume it's most likely going to create a profit-taking induced environment or a sell-induced environment intraday, okay? If we come down here, markets have taken the news of a EU-US trade deal positively, The deal is largely rumored in the middle of last week and seems to follow a template of 15 baseline tariffs and a commitment to spending big on U.S. goods and energy. The deal is better than the 30 to 50% tariff rate threatened over the last couple of months, although it is probably as bad as the universal tariff rate being discussed last year. So really there was no shift in making anything better. They kind of just didn't make it as bad as people thought. We still don't know what's going to happen to the pharmaceutical sector, where the results of the trade investigations may well be released later this week. So see how I have this highlighted in orange here? Because again, this is a report from a financial institution a day after our report here at CYPRX. If you go back to our July 27th report highlighted in orange, we had annotated here that the trade investigations are set to come out in 2 weeks, and that's a date that we need to be paying attention to. And this ING report here reciprocated that. It says they still don't know what's going to happen to the pharmaceutical sector, where the results of trade investigations may well be released later on this week. In terms of a big trade deal is yet to be secured, the market will still be on the lookout for deals with Asia and South Korea, Taiwan, India, and perhaps anything new for Mexico and Canada too. So we still have a whole bunch of things on the horizon that we need to be mindful of. Given that a deal close to this one was heavily rumored last week, it may be of no surprise then that FX markets have not done much overnight. However, there is a huge amount of macro data and central bank action this week, which we think can provide some support to the dollar. So they're mentioning yet again that they believe that dollar strength is on the horizon. Okay. And then here, this sentence tells us that the price or that the EU-US agreement was already priced into the market. It says this agreement was heavily rumored last week. So now that the agreement is actually out and Trump came out all bullish and whatnot, yeah, high five in the EU and we made the best deal ever, the markets pulled back. So again, retail traders that are uneducated that don't know that markets price things in advance are now like, well, what the heck? I took long positions thinking that the market was going to go higher, but now today the market's down $50 billion. And we know one of those contributing factors is due to the dollar strength, which we're seeing across the board. The market's now already pricing in. So you guys see what I'm trying to show you? The banks right now are expecting that the data this week is going to support the dollar. We're already seeing dollar strength ahead of that. So what do you think they're doing? They're pricing that in. They're factoring that in right now, right? That's how these things shift. That's how these markets move. This macro data includes jobs data, JOLTS Tuesday, NFP Friday, a likely bounce back in sector quarter GDP on Wednesday, and stickier inflation on Thursday, June core PCE, which should tick back up to 0.3% month on month. This should leave the majority of the Federal Reserve participants comfortable in their patient position on interest rates. FOMC meeting on Wednesday, and see further pricing out, look at this, and see further pricing out of the prospects of a September Fed cut. So now we're starting to see the markets do what? They're already doing this ahead of the curve. They're pricing out rate cuts. And we talked about this in previous Zoom calls. I know for a fact we did. I don't remember particularly what Zoom call it was, but it was one of the most relatively recent ones that we had in July, right? Where we talked about specifically, I said word for word, the markets have done this before. We saw it last year in the election horizon, where in November and December, the markets were aggressively pricing in that in 2025, the Fed was going to cut rates. Then December 18, Jerome Powell came out and crapped on all that, came out excessively hawkish, and the market pulled back. And I said that we could be seeing a possible scenario where that takes place yet again. It's not happened yet, right? We could see this week data completely support rate cuts. We could see lower inflation. We could see weaker jobs data, and we could see a surprise dovish Fed. However, is that the likely scenario? Probably not, honestly, at this point. I don't see that happening. Is it possible? Absolutely, but I don't think that that's going to happen. I think that we're going to get a mixed week of data. I think it's going to throw the markets in a loop. We continue to favor a period of consolidation for the dollar, where the DXY can grind back towards the 99 area at its highest, assuming that the data obliges. So I'm just here showing you guys again that they're attempting to price this in already. It says here, this is talking about Euro USD. Remember, I told you guys in previous calls, it's important to pay attention to FX rates as well. Why? Because you have FX pairs that are viewed as risk assets or risk off assets. So for example, the Euro, the Great British Pound, the Australian dollar, they're all riskier assets in the FX realm of things. versus the US dollar, which is seen as a safe haven currency. So you can use these inverse correlations to see what speculative markets like risk assets, crypto, are going to do. For example, it says here, with a speculative market already reasonably long euros and a 2% per annum cost of carry against the dollar to deal with, we do not see the case for Euro USD to immediately push to the highest point at 1.18, and instead, we have a bias for Euro USD drifting below 117. So they're expecting risk assets to be relatively weak in the coming week. They're expecting, it says right here, especially if the Fed resists pressure to cut rates this Wednesday. They're expecting weakness in Euro USD. Again, Euro being a risk asset against the United States dollar will replace this with XRP USD or Bitcoin USD. Again, a risk asset against a safe haven asset. If we see more demand for the US dollar this week due to a pushback on rate cuts, it is again, therefore, most likely going to have a negative correlation to crypto. So I just wanted to pick apart this ING report for you guys to show you all that, again, here in this community, we've been talking about these things well in advance. Now let's kind of finish off the report from July yesterday, 27th, and go over the inverse side of things. So likewise, any renewed uncertainty in trade negotiations, especially if the verbal agreement with the EU fails to materialize into a signed deal, that could also sour market sentiment. So finishing that off there. If any of these things inversely happen, so for example, we see positive trade negotiations between any of the jurisdictions mentioned in this report, right? We had Mexico, Canada, India, South Korea, so on and so forth. If any jurisdictions strike positive deals with the United States, and we see optimism around that that has not been priced into the market yet, that could obviously, of course, be a bullish catalyst this upcoming week. If we see lower inflation readings, when the market right now we can clearly see is expecting an uptick in inflation, that would most likely surprise the market. The market would have to price that in, and we'd likely see a supportive risk-on environment. If we saw any data that points to dollar weakness or a higher probability that the Fed can cut rates at their next meeting in September or sometime later on this year, that's going to, again, most likely support risk assets. If we saw a surprise dovish leaning tone from Jerome Powell at this meeting, that would also support risk assets. So moving forward, we have to understand that, albeit right now, the market is slightly starting to price in a lower probability of rate cuts this year, as we've seen in the reports from banks, and they're starting to price in dollar strength because of the data. We still have to wait for the data to come out. So with that being said, I would still be cautiously optimistic above the last week low in the last full week of July. So that comes up into here at roughly about $3.6 trillion. Reason being is because if we look at how many times buyers have made an attempt to defend at these levels and push through roughly about $3.9 trillion, this is the most recent A to B move that, in my personal opinion, we would need to see sellers break before we can completely reverse our bias. So you can see what I'm thinking is, even if we were to see a down day in crypto, we could still see buyers defend at these levels where they previously bought, making another attempt to break above last week's high. We could also see, in a continued risk-on environment, a short to medium-term retracement down into last week's lows, buyers defend, and make yet again another attempt to break prices higher. So until this higher low at $3.6 trillion is broken, I remain optimistic that the uptrend that we've seen from July is going to continue. And this is, of course, if we see fundamentals that support a risk-on environment. Keeping in mind that intraday we could still see some down days, because in order to get these pullbacks, it is going to require a few $100 billion shed from the market. But overall, I'd still be optimistic that the uptrend can continue and that we could see an attempt by buyers to defend and make a leg higher. However, if condition worsens and we start to see sentiment extremely sour, meaning we get a really hawkish Fed and the rate cut sentiment changes swiftly, if we see higher inflation beating market expectations and coming out way above market expectations. So say, for example, right now we saw that the month over month is set to increase according to the market expectations by 0.3%. Well, if it comes out 0.4%, right? A point higher than what the market was expecting, that is also going to dampen rate cuts much broader than what's currently being priced in, right? If we saw excessively upbeat labor market data, or we saw trade negotiations completely go haywire and fall apart, right? With jurisdictions that still have yet to sign trade deals into fruition retaliating against the United States, any of those things happen, okay? And we were to break 3.6 trillion and see a bearish close underneath of it with the retest, with buyers making an attempt, a failed attempt to push price higher, that is when I would start to be concerned, right? I would start to be concerned that we're most likely going to correct more of the July move. That's most likely going to open the door for the July lows to be met and revisited. And we're probably going to see a full-on correction of this July move. The July monthly low comes in at about $3.2 trillion. So even though, to just paint a very optimistic perspective long term, if we were to get a correction like this back down into July lows, it would be painful to get us there, but on the higher time frame, it would still respect the overall bullish structure that we've seen since pretty much August of last year. So just keep that in mind. I'm not saying that this is going to happen. However, if the market sentiment does sour and we break $3.6 trillion, we'll get to that point when we get there. That would possibly open the door for a deeper correction of the July bullish move. And I still would not be worried. I would 110% be looking at opportunities to dollar cost average in under those conditions, where you guys will definitely get an update on dollar cost average levels that I'd be looking and piquing my interest into. Outside of that, though, that's all that I have for you guys in terms of today's analysis. Hopefully, you guys understand now where we're at in the current market landscape, why we were excessively bullish in July, now where we're currently at, and heading into August with the recent dollar strength, sellers defending at last week's highs, no real fundamental backdrop supporting a continued extension of risk-on sentiment. And now we're starting to see uncertain conditions linger as we roll into a new business month. At the same exact time, we have one of the biggest, central bank meetings between multiple different central, but like it's not coincidence that we're here right now at a premium at one of the most important weeks of the month, at the end of the month, rolling into a new month, is what I'm trying to say. So let's continue to be mindful. If we want to see higher prices, we want to see, what were some of our higher targets on XRP? We want to see 382 to 444 come into fruition. We need to see a continued risk-on induced environment. It's possible, but we're not there right now. So let's not get overly optimistic. Let's continue to track these things day by day. Tomorrow, the first immediate fundamentals that we need to be mindful of before I open the floor for questions.